Today we're gonna talk a little bit more about the balance sheet. We're gonna keep on the balance sheet revision we were doing in the previous video. And today we're gonna approach the analysis of the balance sheet. First of all, we're gonna look at the horizontal and the vertical analysis. And later on, we're gonna move to the base year comparisons and the ratio as well. So guys, here's the balance sheet. This same balance sheet you have with you. It's an exercise he gave on class. The name of the hotel is of Aaron Water Tours condensed balance sheet, December 31. We'll have 2 years in the balance sheet. We're doing a comparison between the previous year and this year. Let's say 2007 is this year. And we're gonna start by doing the horizontal analysis. To do the horizontal analysis, first of all, you need to calculate the amount. To calculate the amount is very easy. You just do assets of 2007 minus assets of 2006. Like this, you will know if there was an increase or a decrease. So let's write it here. So as you see, I did the current year minus last year. And we got the difference between both, which means, since it's a positive difference, it means that the assets increased 75,000 from 2006 to 2007. Now you want to calculate a percentage. You want to calculate the percentage of the increase. In this case, what you will do is 505,000 minus 430,000 divided by 430,000, which is the value of the last year, the previous year. In this case, you already calculated this amount. You already did the current year minus last year. You've got this. Now you have to divide this amount by the previous year. So we're gonna do 75,000 divided by 430,000. In this case, we can see that the comparison between the two balance sheets reflects an increase of 17.4% over the period of 1 year. For the other lines of the balance sheet, you have to do the same process. Current year minus previous year amount. Percentage would be current year minus previous year divided by previous year. Like this, you will know how much was the increase or the decrease over a 1 year period. If you guys want, I will give you a moment so you can do the exercise by yourself. You can click pause and then we come back later when you have the exercise done. We can compare the results together. Alright guys, I've done here the calculations for you. If you want to check, of course in your exercise you have some more details like assets, current assets, plant assets, which are the fixed assets like land, building, something that is fixed. And you would have as well more details for liabilities, more details for owner's equity. But at the end, I wanted you to have this idea, this general idea of how to do the horizontal and vertical analysis. So let's go to the most important part of it, which how you interpret the results. In this case, as you've seen before, we had an increase in assets, which is, so far we can look at with good eyes as something positive. But you had an increase of liabilities as well. If you increase your liabilities, it means that you're owing more money than before. In this case, you're owing 40% more money than before, which is not something necessarily good. It's normally negative. It might be the answer of why you increased your assets. Maybe you borrowed money and then it increased your cash, or maybe you're paying later all the marketable securities you want to buy, the plant assets you bought. So normally there might be a link between both, and you can use it in your exercise to explain every single increase, decrease in percentages. In the next line, which is one of the, as well, very important line, the owner's equity, which means that how much would be the claim to the owner of the business. In this case, you will see that there is an increase of 3.4. It's not a big increase, but it might also have been explained about the liabilities. Maybe they are supposed to pay a big dividend and they just put it in dividend payable. They're not going to pay yet, they'll pay it later. And this small number might be reflected as well because of what you see in your exercise. You'll see that retained earnings decreased. One of the main reasons why retained earnings might have decreased is because you had losses. Maybe your company wasn't that good. Maybe it's related again to the liabilities. Maybe you lost money, and that's why you don't have as much growth. Or you can say you had a little bit of growth because you issued common stock, and by issuing common stock, you had some money coming in. The next analysis is the vertical analysis. The vertical analysis is taking the line, the value of the line, and dividing it by the total assets line. So it's basically an indication of how much percentage is my liabilities compared to my assets. So maybe my liabilities would be 40% of my assets. So in this case, for example, let's take assets. In your exercise, we'll have current, plant, and they will be different. For us, let's stick to total assets. Total assets divided by total assets multiplied by 100 will be 100%. In this case, total liabilities, when you divide 231,000 by 505,000, you would have 45.7% of your total assets correspond to the same value as total liabilities. And the same you will do in total owner's equity as well. Once you have done this line, you can jump for the other line and do the same. 430,000 divided by 430,000 equals 100%. Right here, 100%. You'll do the same calculations for both as you did for the liabilities and total owner's equity of 2007. So once you have done that, you can analyze, for example, how much did it change in the percentages from one year to another. Last year, 38.4% of your assets corresponded to the liabilities. The share of liabilities this year is bigger, 45.7%. This increase in the value of liabilities is something negative. It means that part of your assets, part of the things you own, are actually in debt. You're owing 47% of the things you have in assets as a corresponding percentage. And for the owner's equity, you will see there is a decrease. Before, you would claim 61.6% of your assets, and nowadays you only claim 54.3%, which is again negative. Normally, as a business owner, you would prefer to have more ownership of your assets than having a lot of debt, which is what happened here. A lot of debt and a decrease in owner's equity. So guys, let me talk a little bit of the base year comparisons, the base year analysis, whatever you want to call it. in this kind of analysis, we're gonna compare our, for example, in this case, assets, we're gonna compare them to the assets of a specific year. That specific year we're basing ourselves on is called the base year. In this case, I choose 2013. In the exam, it might be another year. It's completely random, is subjective to the teacher, and it's going to be written in the exam. Specifically, which one of the years is the base year. So to start the calculations, for example, we're gonna try to understand what was the increase from 2013 to 2014. So we're gonna do this, we're gonna apply this formula, which is the line amount. This is a line. We're having this line amount minus base year amount divided by base year amount as well. So we're gonna do 11,000 minus 10,000, 1,000 divided by 10,000, and you're gonna find that there was an increase of 10%. So you can write it here. From 2013, our base year, to 2014, there was an increase of 10%. Next year, 2015. Let's take 2015. In this case, we're doing the same. 9,000, the line amount, minus the base year amount, 10,000, divided by base year amount as well, 10,000. So as you see, in this case, we'll have minus 1,000 divided by 10,000. So you can portray this as a decrease of 10%. You may not want to write it like this, minus 10%, and instead write it like 10% in parentheses, which is how we do in financial statements. All the negative amounts, we'll write it in between parentheses. So here you can write minus 10%. There was a decrease of 10%. For the last one, I'll let you guys do it. So the last analysis that we didn't see yet is the ratio analysis. I will not approach the ratio analysis in this video. We're gonna keep it a little bit for the end, where we're gonna approach chapter 5. We're only gonna talk about ratio analysis. And this will be very important for your IP. So not for IP, for finance project. And I will give you a video specifically for that, because it's very important, and it's better for us to get into detail in a specific video. Thank you guys for watching. I hope you'll enjoy the video as much as you enjoyed the past ones as well. It's gonna get harder, that's the normal way. And next video, Champé is gonna talk a little bit about income statement, and I hope you enjoy it as well. Thank you.